Hi, it's David here with Futures Trading. I want to go ahead and update you on the ES and the NQ. We're going to be putting it all together. So all the information collectively, as far as the three turning points with the chart scale, the trading ranges, and the static levels, we're going to cover this. Now, remember that chart scale is the thing that, of course, this individual is trying to cover on his own with some information that you do not need. So make sure that you don't fall victim to that. I tried to make you aware of who that is. So if you see this individual, you don't want to listen to what that individual is saying about that chart scale. He's making it far more complicated than what it is. You do not need all of that information happening on the chart in order to know where the market is going to turn at. All right. So we're going to cover this. We're going to cover that trend as well as the no touch, all on the 1 minute. So we're going to drive down from that hourly high, and then we're going to take a look at what it looks like on that lower time frame. All right, so we're going to be putting it together. And again, thank you for the views. Thank you for taking a look. And again, if you want to know who that is, you're more than welcome to do so. I suggest that you do lay eyes on the individual, so that way you're not taken advantage of by what it is that they're promoting. All right, and you're more than welcome to follow me on all of these different networks. I tried to add a couple more there in case you want to reach out. You're more than welcome to do so. Now, thank you, Payment, for that comment also, my friend. I appreciate that. I saw that this morning, and I appreciate you doing so. Thank you so much, sir. Now, here's the ES. Here's the ES. It had the trend. I covered it yesterday. It had the trend. And of course, they came close to the distance. And again, this is just a little bit different than the NQ. But here's the trend back down. Okay. And so your expected distance is here. So they may go ahead and hit this today. I know they're breaking of a new low, but they should hit that. However, I do believe that this could be your next target. So that's 44.55. 44.55 should be possibly where they're going to land and where they're going to wind up. So they may not happen until next week because I know they're a bit slower than the NQ, but that's what you're looking at. Now, let's take a look at this. It's NQ, and this again the hourly. You can look up here. This is the NQ in the upper left hand corner. The time is 8:34. And I told you on yesterday that I did not like the way they climbed. They got some stuff going on with it, and I don't trust it. All right. So I told you that in yesterday's video. Price was here. All right. Now, when they came up, they did not set the trend. We were waiting for one more bar there, and they didn't do it. So I drew that zone for you here. And of course, there's some buy zones here. But what I'm going to do is I'm going to go ahead and let you take a look at the sell side zones on the 1 minute. So we're going to be kind of just flipping these upside down, and because I didn't want to do it here because I had already put this like this, and I didn't want to take away from what it is that you saw in the last video. And so we're going to look at it from the sell side on the 1 minute from this high. So we're going to do it from this high back down. All right. So now let's take a look at that. Let's take a look at that information. All right. So before I move this out of screen, I'll let you look at it from side by side. And so this is the 1 minute with this high. And so we're going to take a look at this 1 minute and the sell side zones on the way down. So I flip these zones upside down so you can take a look. All right, now let's cover this really quickly here. Again, this is putting it together so you can learn directly from me how to utilize that chart scale and that range. All right, so now that's the high. Okay, that's that high. There's the trend. They made the trend. They made a trend back up as well, but they got to give you your trend distance. And that's the thing to validate the trend. All right. Because remember, it's all about time. You know, it's from, through, and into. You got to remember that. That's something that I definitely stress to you. And so they have to, of course, make one of the distance. Okay. You can't do both. And so either go through the high or come back through this low. And so you'll want to make sure that they're doing that. Now, I have the leg here because they have a run on here. There's really no structure in the run. And so this will be your leg one, that's leg two. And that's something else that I did put on the channel. This market structure video, you can find that actually in the trading guide. So you can find that here. It's a really simple way of looking at the market, kind of just doing a fractal alignment, if you will. And so they can pass leg one. You just don't want them to pass leg two. And so now this is the center of the scale. All right, so the center of the scale. You don't need a higher time frame. You don't need trend lines on the top of the candles to project the upper side of the scale. You don't have to go to some higher time frame with a 3 or 4 taps on the bottom in order to get it to work. That's not how this stuff is done. It's really simple. All right, remember, I'm the pioneer of this approach. I told you that a week ago, and I meant it. So Really simple. I wanted to make sure that you understand that this stuff is not to be convoluted with a lot of other rhetoric. Pioneer professional of the chart scale method. I want you to make sure that you know this. Here's the center of the scale. They come to the center of the scale. There's a chance that you may get a reaction. Got to put it all together. Here's the static level. Here's the center of the scale, and they're taking out leg one. Is it possible that they can take out leg two? You would have to see. And of course, there's your trend distance back down. And of course, we're breaking down. Now, with the sell side zone, they came in here to that 55. If you were doing the buy side, it would be 55 down to 45. So 45 is back down here. And then, of course, from the sell side, that's the buy side, I'm sorry, down to 45. And then the sell side, it would be 55 up to 65. All right. So there's the leg. This is your leg. This is a leg. Now, we're going to take a look at the scale now. All right. So they're trying to make a trend up. Okay. So they made a trend up with this bar here, and there's your projected distance here. Okay, now you're approaching the center of the scale. Now I want you to keep mind of that. This is the center of the scale. And so they get to the center of the scale. They get here. All right. Now you can get that rotation back down. Right here, you don't have the static level, set here. But again, you break this leg, just don't break this one. And of course, the upper part of the scale is up here. There's the mid of the reversal because your downtrend was set down here. So they came back down, made you a downtrend, and it can't be both. I want you to understand that it cannot be both. It can only be one. And so don't be taken by this up and down that they do. And so of course there's the mid. I projected it forward. Now here's the center of your scale. All right. So the center of your scale is here again. And it moved down, of course, as the chart moved, it moves. All right. So now we're trying to make an uptrend again. Now here's the center of your scale again. All right, so here's the center of your scale. Again, no other time frame needed. Here's the center of your scale. They're coming into above it. Remember, the chart scale adjusts. And so now you're above your center of your scale. You're getting more upside movement. All right, now here's the upper part of your scale with the center part of your scale. And here's your lower part of your scale. They didn't quite make that distance. Again, here's the open of the second bar lower and the mid. Here's the mid of the reversal off the bottom. Now, these are just two basic requirements for a reversal. There's several others, but they managed to get close to the reversal itself just to turn back around without hitting that open and that mid. But they're in the upper part of the scale. And I want you to keep your mind on this. They're about to make this trend down. Clearly, you don't know that until it's set, but there's your trend. All right, so here's your trend. When they shot down here, that was your trend. You can count all the bars there. There's the center of your scale, the upper part of your scale, and then the lower half. So the range is falling directly in between the center of the scale. That's the mid of the range. All right, so we're putting it all together. That's the overnight. And so then they shot back up from the center to the upper half of the scale. All right, no trend lines on top of the candles, no horizontal lines on the bottom, and definitely no higher time frames needed. This is only for this time frame. And so now we rotate back off the upper half, back to the center, at the center of the scale, as well as the range. Small fluctuation back up, back into the upper portion of the scale. All of that cyclical activity down near the lower half. Okay, now here's the lower half. They're definitely at it now. You get a small reaction there, and then there's your decline outwardly. All right, so now here's some sell side reactions. Of course, you can get uptrends. I didn't want to mark everything, but here's some sell side reactions from the statics. Of course, you got your range up there. They went inside the range for the median, came back out. Now, this is where you'll start using your scale again and back beneath the range, and you're using your statics. And they're bouncing well outside of the zone, because remember, if you was going to run the zone, it would be 15 down to 05. So 05 would be here, and so they gave you a reaction up. But remember, the upper, well, the mid of the scale, upper part of the scale. Let's see if they give you some more action. So here's the high of here, and that's 35. So you would go 25 to 35, and they gave you a reaction dead on and then there's the drop, and here's some more sell side reactions from the static levels. All right, so that's giving you all three aspects of how to look at the market using the information that I released back in May. All right, now again, I've been doing this for many, many years, folks. So if you want to learn that method, I suggest you grab the trading ranges, the static levels, and the chart scale, combined it with the trend as well as the no touch method. And I hope you're paying attention to the bars. If you want, just pause the video, go back wherever you see the red bar with the level, that's a hard stop. And of course, the no close is the NC. So you don't want no closes beneath or above, and you can go ahead and ride the trade. All right. So I wish you all the best with your trading. Take care.